Look, everyone knows mega funds are gobbling up capital like there's no tomorrow. But here's the brutal truth nobody wants to admit. Riding that explosive growth wave without crashing and burning is like tightrope walking over a volcano. The moment you think you've got it figured out, the ground shakes, markets shift, and suddenly all those shiny numbers look like ash. You feel it, right? That gnawing frustration when you pour hours, millions, blood into deals that should be gold, but the returns just don't match the hype. You're chasing growth because that's what's expected, but growth at any cost is a death sentence disguised as success. What kills funds isn't just bad deals or market shifts. It's the endless pressure to scale blindly, to stretch bandwidths, to pretend risks don't multiply along with assets under management. A fund that's too big, too fast, loses its edge. It gets sloppy, slow, bureaucratic. Decisions that used to be sharp start feeling dull. The team's drowned in noise, the signals buried deeper and deeper. And you're stuck juggling too many castles in the air, ignoring the fact that castles don't stand without solid ground. Feeling that choke? That's your gut screaming. It's saying, this model is broken. So what's the fix? Stop pretending growth without risk is a given. Step back, strip away the fluff, and focus like a laser on quality over quantity. It starts by ruthlessly cutting distraction. This means no more chasing the hype deals you don't fully grasp. No more inflating fund size just because everyone else does. Build small, nimble teams with real skin in the game. People who think like founders, not just number crunchers. Push decision-making right to the front lines where information is freshest and where accountability lives. If you're still relying on spreadsheets stacked with outdated data, you're already behind. Force yourself to face the ugly truth. Every new dollar under management increases risk, period. Not just financial risk, but operational and strategic risk too. That's why you must master the art of intentional contraction alongside growth. Know when to pull back, when to prune, and how to double down on the areas that actually create outsized returns. Grow your network to include not just more investors, but smarter, more complementary partners who challenge your assumptions. Diversity of thought here isn't a buzzword, it's survival. And here's the real game changer. Embrace what most mega funds fear: radical transparency. Share more than just numbers. Share your mistakes, your close calls, your real thesis updates. This brutal honesty doesn't scare away capital, it attracts the right kind. Investors and founders want to know someone's heads up, not just glossy reports. When you build trust through realness, your network won't just follow growth blindly, they'll help you steer through the storms. That's a mega advantage no algorithm can replace. Above all, stop thinking growth means piling on more. Growth means evolving your entire approach, your mindset, infrastructure, and most importantly, your sense of purpose. If your fund's growth doesn't deepen your capacity to understand risk and manage it creatively, you're just gambling bigger, not building better. Get obsessed with mastering that balance and you'll outlast every competitor burning out trying to outgrow their limits. So here's the mission. Take the heat, face the hard calls, and stop running from risk. You want mega funds to thrive? Make risk your ally, not your enemy. Build your network tight, your decisions sharper, your transparency raw. Lean into the tough questions no one wants to hear. That's how you don't just survive the growth explosion, you own it. No smoke, no mirrors, just real, raw execution. Now get to work. Subscribe to our YouTube channel and visit the featured link to discover more.